Today on the Social Investing Network, Snoop Dogg and Steve Aoki are dropping new music like it's hot. But this isn't any ordinary music release.
That's right, fans holding special NFTs will get airdropped 3 new tracks from the duo, but the details on how to get this music are about as confusing as doing your taxes with your eyes closed. Plus, meme stocks take down a hedge fund. Melvin Capital announces it's shutting down over a year after taking huge losses from GameStop and AMC stock.
Plus, Wall Street is flirting with the bear market. But what does that mean for you? We break down everything there is to know about bear markets and their impact. It's Monday, May 23rd. Subscribe below, hit the notification bell. Now let's get into it. Happy Monday, Nicole and Zaid. Our first headline of the day. Did meme stocks take down a huge hedge fund in Melvin Capital? So Melvin Capital was once Wall Street's most successful, one of the most successful hedge funds, which they then lost billions in the meme stock saga, and they shut down because they were hit this year by the market slump. Gabe Plotkin, the founder, said he's winding down the fund and returning cash to investors. Melvin Capital had about $7.8 billion in assets at the end of April, and the fund reportedly lost around 23% in the first 4 months of 2022. This year's losses come in the heels of steep losses in 2021 when Melvin Capital ended the year down 39% after the firm bet the shares of GameStop would tumble. But the rise of WallStreetBets on Reddit, filled with retail investors looking to take down the man, continued to buy GameStop and other meme stocks like AMC, sending meme stocks surging. So, while Redditors on WallStreetBets may have been celebrating, not everyone is celebrating right now. Here's Ken Griffey, Citadel Hedge Funds CEO and founder.
But there was certainly an entertainment dimension that came into play with money that was in some sense just dropped out of the skies into people's wallets. And they took a run at the stock market and GameStop and AMC and dozens of other meme stocks. I'd like to think it was a moment in time. So I'd like to think that's the case. It's not how capital formation works best. And frankly, a lot of it came from a place that I don't think it was very healthy, which is like, let's try to take a firm like Melvin and put them into bankruptcy. Like, great. So you basically help wipe out the pension plans of teachers. You feel good about that? It's like Gabe's money that you're taking down. You're taking down the money of a pension plan that belongs to a teacher. So I don't think it wasn't a very good moment in American capital markets history.
Wow, an interesting take there from Ken Griffin. So he was saying it's not a time to celebrate. But on the other side, the Wall Street Redditors, bet Redditors that are celebrating Nicole and Zaid. Zaid, what do you think? Who won? And should people potentially be celebrating at this?
Yeah, I hate to be taking Ken Griffin's side here, man. But I think he was kind of right here. I can see why the WallStreetBets people are celebrating, because Melvin Capital ended up becoming the target for the meme stock rally last year. But I mean, he's right though. Like, Gabe Plotkin, the founder of Melvin Capital, sure, he lost some money, right? But he didn't lose as much money as like the people's money that he was managing. And yeah, I'm sure Ken Griffin's kind of exaggerating a little bit. Like, yes, I'm sure there were some teacher pension funds and things like that in there, but he probably was also managing money for a lot of rich people as well. But yeah, man, I agree. Like, I don't know if the retail investors really won here. And by closing down shop, what Gabe Plotkin's able to do now is he's going to likely start a new one. So he'll be fine. He'll still have probably billions of dollars under management once he starts a new one, because before the whole meme stock stuff, this guy was returning really good returns, like beating market returns significantly. So I think that Gabe's going to be okay, and I really don't think this is a win for retail investors. I feel horrible agreeing with Ken Griffin on this one, but I think he might be right, man.
It feels like no one really wins, right? It doesn't really feel. I don't really know how I feel about celebrating like other people's losses or other people losing. Kind of whatever if it is their well-beings and that type of thing. So I think we actually should just maybe as a culture need to change the fact that we don't always have to think about like, oh, someone else's gain is my loss or vice versa. So that's what I would say, bigger picture. Yes, this was a part of the goal of the GameStop stock surge. So if in that respect you Redditors feel like they did it, then okay, but at the end of the day, it's like, at what cost? It is a double-edged sword. That was probably the biggest kind of name that the stock surge got. But on the other side of it is that, yes, it did bring in more people than ever before to be interested in managing their finances, to build wealth via investing. But it also exposed America to things like this, right? Like, at what expense? The financial literacy threats that America has faced for years have been exposed because of this. So I do think on the retail investor side, we're ultimately going to be in a better place than we are before. So more people are interested in learning about financial education via friends, family, social media, YouTube shows like this. Hopefully we can kind of get to a place where we don't need to cut each other's throats for it. That's just what I think. But.
That is a fair point. So sorry, I was laughing because you're exactly right, Nicole. I do think there's an interesting thing at play here where every time there's a trade, there's inherently, I feel like, a winner and a loser. And a lot of times it's been the smaller retail crowd that's been losing on these trades. Like, think about what's happening in the market right now, in the downturn. You can make an argument that a lot of people that were trading with smaller amounts of capital, or maybe they got margin called because they didn't really know what they're doing. Obviously, that's fault of their own, but they're the ones losing because if you're buying at these times or you sell your shares now, eventually we have rises and falls. But I will say, they felt like they were taking back a little bit of that power because they were able to really just control what happened to a large hedge fund, and hedge funds do blow up. And apparently, obviously Melvin was the kind of the mascot for the Redditors in this certain instance. So I do think we should not cheer, and we don't know exactly the makeup of the fund he had as far as whose money he was managing. We shouldn't cheer that, but it's also like they kind of put score one for them, it sounds like, for kind of that WallStreetBets come, because they were able to control that narrative in this certain situation.
On top of that, there were probably a lot of retail investors that got caught up in the hype, myself included, when this was all happening, that bought GameStop for way above value, and they're underwater right now.
Yeah.
So I think retail investors they did benefit from all the exposure that trading got over the last year or two, but they're probably a group of people right now that are just hurt so bad or so underwater on their investments that they may be turned off from investing for years, right? So I think overall it's good for retail investors to kind of be more involved in the market, but hopefully they learn from this and aren't just turned away from the markets completely, because investing, I think, is important for everybody. So there's still a lot to unpack here. I'm sure we'll be talking about all this stuff in the coming months, because retail investors are becoming a bigger and bigger part of the investing landscape. All right, moving on to something more lighthearted or maybe confusing. Snoop Dogg and Steve Aoki are collabing on an NFT project. Both of these guys are huge Web3 fans, and they're going to be airdropping some exclusive music to token holders. Now, you guys try to follow along as I try to explain how this all works. So there's a Snoop Dogg NFT token that grants you access to an exclusive Snoop track. But there's also a Steve Aoki token that grants you access to Steve Aoki's tracks. And either one of these tokens gets you access to all 3 new tracks. But there's also a stash box from Snoop that you buy that gives you access to, I guess, 1 of 18 tracks from the album. 3 Gala exclusive bonus tracks. I'm not done. A whitelist token, a collectible open version of the stash box, and more. So my head is spinning at this point because I just don't understand how this works. I'm just trying to listen to good new music. So we're gonna dive into this stuff in the latest version of Fresh Mints.
Yeah.
So
Go ahead.
No, Nicole, what? I tried to explain that. What do you think about all this?
Snoop Dogg and Steve Aoki don't even need this. They're the kind of people that if they just drop music, people are gonna listen. Anyway. This is so funny.
This is incredibly funny, guys. I think this is this utility? Because at the end of the day, I think you want to make things, easier for your core fan base, less expensive. I'm just thinking if we just download, if they just put it out there on all the DSPs, the major distributor platforms, and you're able to just, I see what they're trying to do with, testing out these new technologies, but it just seems a little bit convoluted right now, and it's just not making it easier for a fan or even the average fan. You're pushing the average fan out, I feel like, because this is so complex. It just makes my head spin.
Yeah, 99.9% of people will not do this. Even Snoop super fans will not be doing this because there's a lot of steps to follow. And I mean, guys, we do a show about this stuff, and it's still kind of hard for us to follow. So they need to kind of iron out all the details here. Yeah, it's cool that artists are trying to like, take back control from these distribution platforms, because obviously we know that they don't pay as much. Yeah. So hopefully they can, hopefully more artists can take advantage of NFTs, but this is too confusing for me.
Yeah, I agree. Really, my main thing is I don't understand why there's so many different like drops and stuff, but if this is how music drops are going to happen moving forward, then and if this becomes mainstream, then I'm going to need someone to build something that helps me connect the Apple Music library that I've been building for years and my personal playlist to these new versions of like NFT drops. So that's, I think, where the money is. Who's going to help me? Exactly. Who's going to help me do that transition?
Before we move on, wait, Nicole, you're an Apple Music person, not a Spotify person?
Ooh. I know. The internet's going to come after me.
Oh my God. I love Apple, and I'm still not an Apple Music person.
I just started with it, and I never wanted to like change it out. So, anyway,
Spotify here for me.
We forgive you, Nicole.
All right. All right. Well, let's get into the Noble Guide. The market recently has been flirting with becoming a bear market, scaring some but rallying others. But what exactly is a bear market? What does it mean for you? And why do some think it's a hairbinger of things to come? Let's dive into bear markets in today's No Bull Guide. So what is a bear market? A bear market is when the market experiences prolonged price declines. It typically describes when securities prices fall 20% or more from recent highs, and when there's overall bad vibes among investors, like negative sentiment and widespread pessimism. Bear markets can be cyclical or longer term. A cyclical bear market can last for several weeks or a couple of months, and the longer term can last for several years and even decades. Bear markets also lead into general economic downturns, aka a recession.
Yeah, Nicole. So why are they important and why do they matter? Bear markets matter because as a leading indicator, the stock market gives investors a look into what is happening in the economy. They tend to overlap with economic recessions, and bear market selling tends to hit most equity sectors. It tends to create a domino effect with companies feeling more cautious, slowing hiring, or maybe freezing hiring. So are there benefits of a bear market? Of course. Tough economic times or recessions which can accompany a bear market are not good for anyone, right? From a strictly investing perspective, though, this could be opportune for long-term investors. If you're young and investing for retirement, this could be a time to buy into the market volatility. If you're closer to retirement, this could be a time to rebalance and maybe look at your portfolio and make sure you're allocated appropriately for the current environment.
Yeah, that's exactly right, Delano. And how long do bear markets typically last? Well, unfortunately, bear markets are typically long and drawn out. Since the 1950s, the average bear market has lasted 14 months from the peak all the way to the bottom of the sell-off. And then on average, they've taken about 25 months to climb back to new highs. So long and drawn out. The financial crisis, just to give you guys a bit of an example, the financial crisis from 2008, 2009, lasted 17 months and took 49 months to climb back to new highs. So an extended period of time. The tech bubble lasted 31 months. The bear market lasted 31 months and took 56 months to climb back to new highs. So long and drawn out. Now, what do you do if you're invested during a bear market? So it depends on where you are in life, right? If you're new to investing, well, the best thing, one of the things you could potentially do is dollar cost averaging, which basically means buying a set amount of the asset of your choice every month and just don't look at the performance. Just buy and forget it. If you're a long-term investor, probably the same. Don't panic. Just look at don't look at your portfolio and just dollar cost average. Now it gets a little tricky if you're closer to retirement, right? I think the best thing I can say is just wait to maybe turn in that resignation letter or take in retirement. But that does get tricky, and it all depends on exactly where you are in life and what your portfolio looks like.
Wild times. Well, that does it for our show today, guys. Thank you so much for tuning in, and be sure to like, comment, subscribe, hit that notification bell, and we will see you tomorrow.
See you tomorrow.
We out.
That was kind of a sad way to end the show.
Hey y'all, thanks for watching. Make sure you tune in every day. Also hit that like, subscribe, and notification buttons. We'll see you tomorrow.